By now, most people know they can't just jump into a car and go out and start looking at homes and writing offers. They've got to talk to a lender first. And that means getting a pre-qualification or a pre-approval. But what's the difference between the two? And more importantly, which one do you need? That's what I'm going to talk about today. This is The Happy Home Buyer, episode number 11. I've run out of fingers already, which is awesome. Today we're talking about the difference between a pre-qualification and a pre-approval. And really more importantly, which one is going to be best for you? It's a question that comes up fairly regularly, so now we're just going to cover it. And I want to do that by doing my very favorite thing ever, which is showing you samples. And we're going to start with this one right here, which is simply a copy of the Arizona pre-qualification form. You'll see on it there is tons of boxes for me as a lender to fill out. Now, this is what most people get done before they go out and start looking for a home. It doesn't really help you understand the difference between a pre-qualification and a pre-approval, though, because this is a pre-qualification itself, and these boxes all mean a ton. So what I've really broken this thing down into is three options: a minimum pre-qualification, a maximum pre-qualification, and then the full pre-approval. Minimum pre-qualification means that I've done the absolute minimum to fill out this thing, just enough to give it to a realtor and say, good luck. Maximum pre-qualification means that I've filled this thing out in its entirety, basically checked yes everywhere, and done everything that I can, short of a pre-approval, to say to a borrower and to a realtor, here you go, you should be good on the financing, good luck finding a home. So those are kind of going to be the three pieces we do here. You'll see on this form, I can check whether or not I've looked at their credit or pulled their credit, whether or not they filled out an application, whether or not they've submitted pay stubs, all these different things. It's actually a really good form. When it's filled out in its entirety, it gives the realtor and the borrower both a really good idea of where they stand with the lender. Now, realtors are really good at reading these, especially listing agents. If a listing agent is looking at 3 different offers and 3 different pre-qualifications, and if the offers are similar, but one pre-qualification is just filled out completely, shows that the lender has literally seen everything they can see on the borrower, and the other 2 are more of the minimum pre-qualifications, I like to think that the listing agent is seeing how much stronger this borrower is if all 3 of their offers are fairly close. So something to consider. But again, that doesn't answer the question on what's the difference between a pre-qual and a pre-approval. So that's going to bring us here to a little graph I've put together. Now, a loan can really be broken up into 10 steps, from loan discussion with me, credit pool, yada, 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 all the way up to providing you with loan closing documents. You're going to see here I've broken down minimum, maximum, and full pre-approval. On the minimum pre-qualification, it's really just a loan discussion between me and the borrower. We're going to talk about, in general terms, what they do for a living, how much money they've saved up, how much home they want to buy. This is going to be usually for folks that are just kind of starting to kick the tires of looking at a home, something like that. I'm not actually going to get a loan application from them. I'm not going to pull their credit. I'm not going to look at their documentations. I'm literally going to have a discussion with them, but the pre-qualification form allows me to check the box that, hey, I had a discussion with them, and based on that discussion, they should qualify for these things. The problem is, obviously, that's not very good at verifying a lot of pieces, but that is an option there. So that's the minimum pre-qualification. The maximum pre-qualification shows me doing that loan discussion, pulling and reviewing the credit, running an automated approval, which means I'm running it through Fannie Mae or Freddie Mac's underwriting or automated loan underwriting piece, which means I'm taking the full loan application, I'm taking the credit report, and I'm running both of them through the computer, and the computer's going to say, based on this information, yeah, we can issue them, a loan approval. And then I'm also going to review their income and asset documents, which means that you're going to send me your pay stubs, bank statements, taxes, those type of things, and I'm going to look at them and try to find something wrong with them. If I don't find anything wrong with them, I'm going to issue this maximum pre-qualification. I'm going to check yes to all the boxes on that pre-qual form. I'm going to hand it over to you and fairly confidently tell you, hey, go start looking at homes. You're going to be good as long as you stick in the sales price range that we've got there. Realtors are going to look at it and say, hey, if you've done a bulk of your homework up front, it's going to be a very strong option for you. But again, that doesn't answer it. The full difference here between that and a pre-approval is in who touches the file. You'll see on the far right-hand side here, I show you kind of who touches the file along those 10 pieces. Through the maximum pre-qualification, I'm the only one that touches the file. I'm having the discussion. I'm pulling your credit. I'm running the automated approval. I'm looking at your loan documents. Now, some people say I'm awesome. A lot of them don't. But I'm not infallible. I can miss things. I mean, there's lots of loan programs, there's guidelines that change all the time. If I look at a file and I say, you're going to be okay, you got a 99% chance of being okay, because in my head, I'm not going to say that unless I have a backup plan and a backup to my backup plan. But in reality, your loan originator is the only one that's seen it through the pre-qualification stage, and that's the difference. The pre-approval stage pushes it to the processing team and pushes it to the underwriting team. The processors are going to verify everything that you've sent in. So you provided me pay stubs, but they're also going to reach out to your employer and get verification that what you provided is actually what you get paid. They're also going to reach out to the IRS and verify that what you've provided on your tax returns is the same thing you provided to them. They're going to do all sorts of things like that. And then the underwriter is going to look at the file yet again with that fine-tooth comb and see if there's absolutely anything wrong with it. Now, once those two stages have been done on top of everything I can do, the underwriter is going to issue what's called a conditional loan approval. They can't issue a full loan approval because we don't have an appraisal yet. Without that appraisal, we can't do our disclosures because we have no property to disclose on. We can't do our final verifications because those are done right before you close, and surely we can't issue loan docs. So a full pre-approval is going to be everything besides those pieces we simply can't do without an address and the ability to order an appraisal. And that's the huge difference between the two. But now that you know kind of the differences, a lot of people are thinking, okay, then everybody should get pre-approved. And there's a problem for you. And the biggest problem really is time. Time for me, time for you, time for the underwriters, time for everybody. A pre-approval takes quite a bit of time because it takes my time, processor's time, underwriter's time. It takes your time. So if you decide, you call me on Friday, you want to start looking at homes over the weekend, you're not getting a pre-approval. If you call me a Friday 2.5 weeks in advance of looking at homes, then we could potentially get you a pre-approval. We could run it through all these stages. So time is definitely important. But even more important than that, let me show you a little graph here that more thoroughly explains who should be getting a pre-approval, who should get a minimum pre-qualification, these type of things. So what I've done here is 3 scenarios. Borrower 1, borrower 2, borrower 3. Borrower 1, 800 plus FICO borrower. This person's paid a high salary. They've got their down payment and then some already liquid in a bank, and they have no home to sell. These are like the walk-on water people. We call them the A-plus borrowers. These people are golden. They could get away with as little as a minimum pre-qualification. I'm going to have that discussion with them. I'm going to hear, hey, I see that they're paid a high salary, or at least I'll hear that they're paid a high salary. I'm going to hear that they've said they have the 800 plus FICO. I'm going to hear all these positive things about them. Now, if they're a pathological liar, they're going to run into issue after issue. But if they're not, then this is somebody that could potentially get away with the minimum pre-qualification. I wouldn't be too comfortable with it. Most realtors won't take it. But this is the type of person that the minimum pre-qualification is put together for. This person could call me up in front of a house, and by the time they can walk to the front door, I could issue that minimum pre-qualification, and they're probably going to be okay unless they've lied about everything. Borrower number 2 is more of the typical borrower that we interact with every single day. They've got like a 699 FICO. They're paid a salary plus a small bonus or a small commission, something like that that's going to make me do an actual income calculation. Maybe they're getting a small gift for the down payment, but they're currently renting. I don't have to worry about them trying to sell a home or lease a home or anything like that. This is a borrower that's going to be an easy deal for us to do, but they've just got a few things that we should verify to make sure that there's going to be no hiccups between now and closing. This is somebody I would do a max pre-qualification on. I would get their credit pulled. I would have them send me in documentation. I would run it through the automated system. I would ask for them to do all those things just so I could feel confident that in the end I'm going to be able to close on the loan that they want closed on. I'm also probably going to have a B and a C plan for a backup just to make sure. Borrower number 3 though, 625 FICO, maybe they're paid all commission or all bonus, maybe they're self-employed, they've got some interesting income for me to deal with, they have no plan for where their down payment's coming from, and maybe they're living with family. At least they don't have a house to sell, but they also don't have any rent for me to verify. This is a borrower that needs a full pre-approval. There's too many factors in here that I could mess up, or that I could overlook, or that they could overlook, that would just end up in having a loan denial in the end. This is also the type of borrower that probably doesn't have a bunch of extra cash laying around to have a hiccup like that. So if I gave them a false pre-qualification and they wrote an offer and spent $500 on an inspection, $525 on an appraisal, and then I issued a loan denial, it'd probably be devastating for them. So this is the type of borrower that I'm going to say, go full pre-approval the entire time. Make sure that we spend the time to get it just all the way through those stages so that they can look for a home confidently. So those are really the differences between pre-qualification, qualification, and pre-approval. Now you know. So when you're going out there, you know your situation. You know if you're more like a borrower 1 or a borrower 2 or a borrower 3, you know. So you've got a good idea now on which one of those you should really be after before you get in the car. And I know of a good lender for you to call in case you need any one of those. But hope you're enjoying these series. Watch the first 10 if you haven't already. Check out the ones that are coming up. And of course, call me if you need absolutely anything. My direct line is 480-744-6040. Thanks, and we'll talk to you soon.